Alright, welcome to this video. What I will do here is I will take a closer look at euro dollar on the forward chart, and I will show you once more that all big foreign exchange moves are driven by the market manipulation, by the smart money cartel, inducing price moves against the so-called dumb money majority, taking out the stops. So I hope that, after this presentation you will really understand a bit more the big picture. So this is the euro dollar now at 1.13152. Today is the 13th of February 2019. It's 12:15 local time. And remember that here you can see all the dumb money positions which have been in the market. This histogram shows you all the dumb money positions which are currently in the market. So you can see that the current downtrend in euro dollar was a result of this big dumb money long trading activity, represented by these green bars. So this is still in the market. That's the reason why the euro dollar came down so much, why the dollar gained strength against the euro. So let me show you that very explicitly. And the best way to do it is probably to make you aware of the different scenarios we had in the last month. So look at this. Dumb money short activity represented by the red bars. Okay, uptrend induced by the smart money. So these shorties lose and the stops are taken out. What's going on here? Same thing. What's going on here? Same thing. Shorties come in the market. The smart money pushes euro dollar all the way up against them, taking out the stops. What's going on here? You see? And those exaggerated moves, the stop runs at the end, are often fueled by additional dumb money on the same side, trying to, average down or whatever. And the same the other way around. Once the dumb money tries to buy euro dollar, what happens? There you go. Smart money pushes the price down against them. Let's go back. Dumb money buys, smart money pushes the price down against them. It's not difficult to understand what's going on here, I guess. Dumb money buys, boom. Smart money pushes the price down against them. Look at this period, the multi-week period of a downtrend. Dumb money is long buying, demand. According to the wrong supply and demand theory, there's more demand, so the price will go up. No, the opposite happens. Okay, the smart money cartel detects those buyers and pushes the price all the way against them, even over weeks, going for the stops. So I hope this is really clear. Dumb money buys, smart money downtrend. Dumb money buys, smart money downtrend. Dumb money buys, smart money induces a downtrend. Dumb money buys, smart money induces a downtrend. You get the idea, And the other way around. The dumb money sells. The smart money cartel pushes the price up. The dumb money sells. The smart money cartel pushes the price up. Dumb money sells. Smart money cartel pushes the price up. Of course, in between they do counter moves, They take out the ones who were positioned correctly. Of course they do that. They want to avoid people being able to jump on the right side. We know the games. I've shown them now for a very long time. Okay, so here, fishing out the longies, which are on the right side, taking out the stops. You see, with an exaggerated move and then going back. Okay, here with the pullback, fishing out the shorties. Here, before the big move, fishing out the longies. Here in a smaller fashion because there were so many longies, but still, at least some shorties with tight stops are kicked out. Okay? Here, uptrend, kick out some guys who jumped on long with a counter move and then big change back. Okay? Same here. So basically, it should be pretty clear what's going on, and I've shown this in many videos. I've shown live trade videos over a long time period now, several years. I've shown videos, educational ones, where I explain, you know, the principles they apply. I've explained the stop hunting, yeah, which is kind of common knowledge these days. I've explained, you know, all the principles like dumb money tolerance, time and range, you know, the counter run principle, the H4 principle, all these things I have shown. I've not shown everything, but I've shown a good chunk of material for you to study and understand and incorporate in whatever you do in FX. Because it should be really clear how manipulated this market is. Okay, we know who is doing it, we know how it's done, and you know, whatever you do, if you do not incorporate this in one way or another, you will definitely end up on the dumb money side. Okay, and you will get hunted. And then, as you know, all the other stuff comes on top, yeah, like psychology. So people let losers run and they cut their winners. So what happens if they're on the wrong side, the price goes against them? Do they cut? No, they hold on and their loss becomes bigger until they get stopped out or get a margin call. And then what do? They even make the problem worse by increasing, okay? And then, you know, this makes the problem worse. And that's what the smart money banks on, and it works very well. So as you can see just from this sample, yeah, of multi-month, supply and demand is a complete illusion. Yeah, it's not existent in that form as it's explained, and at the same time the manipulation is dominant. Yeah, every price move is a result of the algorithmic market manipulation conducted by the smart money. This should be clear by now. There is no way, you know, that I would have been able to document this over such a long time with so many examples, you know, without you understanding that this is very clear evidence. Okay. So I'm sure that I contributed my parts, you know, to, you know, traders who actually do their homework and do their research and find those kind of videos, who want to understand what's going on, that they actually have a better chance to understand these dynamics and, you know, what they have to do in order to not end up on the so-called dumb money side. And again, remember, on the dumb money side, we are not talking about, you know, retail traders as the main group. We talk also about corporates, yeah, who are not in the market to actually make a profit, but for example who try to hedge currency exposure. But still, you know, they will, over a long period of time, they will fall victim to this market manipulation by the banks, yeah, and by the smart money. They have full price control, as you can see. All right, it's a clear principle. Now, the more short term you try to trade, and the more accurate, so to speak, you try to trade, you have to understand the principles better. And I've shown this in other videos, but of course, and you can see that from the dumb money tolerance. Let's try to find an example where the dumb money was allowed to win a bit. Well, let's take the most recent one. Let's talk about the pullback in euro-dollar, and of course there are different factors to understand. So first of all, this is an outer range scenario, so even on the longer term chart, the lows with the important stops have been cleaned, as you can see. Boom, taken out. So this low have been cleaned by this move. So what's happening is we were here in an outer range scenario, as I call it. So the stop run has been done against the dumb money in an exaggerated manner. All the stops have been, the lows have been cleaned, and the important long-term stops there have been taken out. So the price is out of the range, and it's an exaggerated move. Yeah, these have been highly reduced. Also understand that the scale here is adjustable, so which means that if, for example, overall there is not much dumb money in there anymore on the scale, this is magnified. Okay, so that's the reason why you see in the historical one, you know, that well, let me show you that here you can see, you know, the important size of the accumulations. Let me show you. Okay, right, and it's no coincidence that, for example, when you look at the really big accumulations, there are big moves as a result. You see, boom, Boom. Boom. Etc. etc. You get the idea. Boom. Boom. So basically, now once the main targets, the main long-term, medium and short-term stop accumulations have been cleaned, like in euro-dollar, and there's been overshooting of this important target level for the smart money. Of course, what do? They go up, they kick down again, they clean the low again for the ones who try to jump on any reversal with a tight stop, so they get cleaned. And then of course, after this big stop hunt and after many longies have been kicked out of the market, you know, this has been up here before, then of course the price is retraced back into the range to normalize things, and also to do several things. On the one hand, to kick out any shorties who try to jump on the move, to go for them. Secondly, to basically normalize the range again. And remember, look, those big positions are already still in a loss, but they can go to this level and clean out those short-term stops of the shorties, just, you know, without letting too many of the late longies get into profit. You understand? And the ones who try to get in new, fresh, they were cleaned with this down move before. Of course, in the end, you know, some of the so-called sticky down money traders, like the sticky longies here, they may have been able to enter, for example, here, and to be a bit into profit, yeah. But remember that these people, they don't know why this happened, and most of the time these are just additional positions of the same trader groups who have been already in the market, who are already in drawdown. And the ones, you know, who come in fresh, you know, they do not know that they were basically lucky to come in like at the end of the party, so to speak, yeah. And if they had a reasonable or close stop, they get kicked out. But if they have a wide stop, they may be lucky on this move for now, you understand? But it's not a profitable long-term strategy. If they try to trade that way all the time, most of the time they will be kicked out, and their risk return is also completely unfavorable, because you know, if they try to also place a stop at the reasonable level, they will get kicked off most of the time. You understand? So, for example, these guys who tried to sell here, you see, to sell on the upper side of the range, cheap into the market, boom, they got they fell victim to this big stop onto the upside. You see? So it's the same kind of strategy, same kind of thinking, like the sticky longies who now may have gotten lucky a bit. You know, but it's a very small group, as I said. All this is measured by the smart money cartel. Yeah. So they have complete, you know, it's all completely automated. There's no human intervention, no human interaction. You know, this manipulation is already pre-programmed. You know, there's not a guy sitting there pushing a button. It's all algorithmic. It's all automatic. But, you know, I hope that this shows pretty well what's going on, yeah? So, stop hunting as such is kind of a known phenomena. I distinguish between short and medium long-term stops, but the position runs, they are not so known. I've made them quite popular, I think. And, of course, the combination is important. And then all the other short-term principles and also long-term principles, I've showed some of them. They need to be understood the more one tries to trade in the short term and more accurately. And obviously there are also meta levels which, you know, explain, for example, in which cases the dumb money tolerance is higher and some of the dumb money is allowed to win. You know, understand that on a 15-minute chart, you cannot just trade against this flow on a short-term chart, yeah? This may be completely in the tolerance. Understand this on a forward chart. So, you know, in the short term, you need to understand what's going on in the market. You can look at the forward chart and say, we're now still in the downtrend phase with longies in the market. And on the 50-minute chart, you may get some shorties in the way, so you do not enter, you wait for pullback. And then if the longies again take over after 2-3 hours, you may go for a short to the empty stops. I've shown that many times, yeah? So, of course, you need to differentiate, yes? You cannot just go and place trades against the dumb money flow, yeah? That is not a good idea. You have to understand the big picture as well as the more micro level, and then where are the medium-term stops? Yeah, for example, pre-run counter principle, do they try to take out the opposite empty accumulation before they go in the main target direction again, etc. I've shown that in other videos. Okay, I think this makes it quite clear that at the end of the day, you know, supply and demand is very far from reality. You know, and I've spent a lot of time and energy into explaining how the foreign exchange market actually works. I really encourage you to check out the other videos and, you know, to undertake an effort into understanding FX. It's nothing like it's explained, you know, in books or, you know, at universities. It's a completely manipulated algorithmic game these days, and on top of all the broker manipulation and so on, you know, this is the inherent market maker manipulation in the market. So, you know, you have to be very careful because the odds are completely against you. Yeah. So the broker manipulation comes one, you know, this you have to get a, you know, to solve, and then the market manipulation comes, and then topics such as, you know, psychology, risk management also come on top. This is why more than 90% lose in foreign exchange. Okay, and if you do not have any kind of proven approach or system, you know, you shouldn't even do anything live. Okay, whether you're a discretionary trader or a systematic trader, in both cases you need to actually show yourself evidence that what you have consistently works. If you test expert advisors and trading robots, you will see that most of them fail after a few months. You know, if you check it on tick data, maybe do another video about this. And the reason for that is that, you know, most of these robots, they cannot incorporate those kind of manipulation dynamics, and they will just fall victim to it. The same like discretionary trading, it's even worse because, you know, it's a bit more difficult to test your discretionary trading strategy, and you may think even visually that it works, and actually overall it does not work consistently. If you would have tested it correctly, it's an illusion. And but there are ways, yeah, there are successful traders, there are even traders trading from naked charts to trade price action, who intuitively understand those principles, sometimes without explicitly understanding them. You see, they come up with their own explanations, but they manage to, you know, say, okay, I know generally the market is manipulated, and here's my naked chart, and here are my principles, and they, you know, do it on the basis of price action. You know, it's a very difficult process. But this is possible, yeah. So there are ways, you know, of becoming profitable. I'm not saying here, you know, that this is not possible, not at all. But, you know, it's not an easy way, and you have to invest, you know, several years and really do your homework. This is not a get-rich-quick scheme, yeah. If you think this is a get-rich-quick scheme, it's the opposite, get-poor-quick scheme, yeah. Because all you will do is just you will place orders into the market, and the smart money takes advantage of you, and you end up on the opposite side of them. And they don't care. They wait until the money positions accumulate and stops accumulate, and then they do their moves. Yeah, and they have also their ways of, for example, maintaining plausibility, as I've shown, for example, with economic news. Yeah. So yeah, I think this was quite a good summary of some certain basic principles I'm trying to explain. Wish you all the best. Stay safe.